Yes, thank you for being here. And I am very happy that you're here, actually. And I wanted to start off out in Europe. I wanted to talk about the referendum with the UK. I wanted to talk about France, Italy, because it looks like everything is working together where the people are looking at the current leaders, looking at the current system, and they're saying, this is not working for us. And it looks like many of these areas are looking to have a referendum like the UK and vote themselves away from the EU, but it has not happened for the UK as of yet. It looks like the EU is trying to stop them any way they possibly can from implementing Article 50. So when you look at Europe right now and you see what's happening, what do you see happening in the EU? Do you think this will affect the banks? What's your take on it?
Well, this is a topical question for me. I got back here to San Diego at 8 o'clock last night, having spent 7 days on the road in Europe, which of course doesn't make me a European expert, but talking to our clients through Europe, the fear in the European community, at least in financial circles, is evident with the way that they are choosing to spend their money. And the truth is what you say, the national elections have become at least partly a method for expressing popular discontent with the politics as they exist in Europe. There isn't a simple answer, which is, of course, what you're looking for. But one of the things that one learns wandering around through Europe is that there is a profound level of discontent with the European government and, in fact, the range of European governments as they exist. My own politics, as you probably know, are somewhere between libertarian and anarcho-capitalist. So that to the extent that an elected government fails, I always find some reason to rejoice. But my happiness isn't reflected by the broader politic. What I can say is that there's a uniform unhappiness with the fourth level of government in Brussels, which doesn't come as any particular surprise to me. If you can't make things work with three levels of government, why would superimposing a fourth work? But as to the pan-European referendum, I think what you're seeing is that the upcoming national elections in Italy and the upcoming elections in France will function in some way, shape, or form as a reflection on Europe. Now, the disagreements that you see are not uniform. I believe it was Mises or perhaps Mencken that characterized elections as advanced auctions of stolen property. And certainly what you're seeing in Europe is the political process writ large, where various various electoral groups are encouraging their elected representatives to shield them from the theft of the Commonwealth at the same time as they're encouraging them to actively steal on behalf of local constituencies. And it makes absolute sense that you'd have a whole bunch of disaffected minorities. From my own point of view, the manifestation of this is the weakness in the euro and the concomitant strength in the dollar. Sprott's European customers, have told us that they expect between a trillion, it's easy to get three zeros confused, $1 trillion and $1.5 trillion euros may migrate to North America over the next 12 to 18 months. Not so much because of the strength of the U.S. economy, but because the U.S. economy is less challenged than the European economies.
Do you think also that they'll rush into the dollar if the EU, if all the referendums hold and they, break away from the EU?
I do believe that you will see dollar strength. I don't believe that this is because the U.S. economy is particularly strong. My own suspicion is that the U.S. economy more resembles your outlook for it than theirs. I remember Doug Casey saying that the U.S. dollar is in effect the prettiest mare at the slaughterhouse, which is saying that it's the worst major currency in the world with the exception of all of the others. The political affliction that you're seeing in the United States is similar to the political affliction that you see in Europe. It's just that we were 10 years late or maybe 15 years late in embracing the policies that have driven Europe to where they are now. So the U.S. looks relatively rather than absolutely strong.
What do you think will happen to the precious metals market, gold, silver, if the European Union starts to disintegrate?
That's the $15 trillion question, isn't it? My own suspicion is that in the next 5 years, or maybe longer, that gold won't win the war against the U.S. dollar, but it will lose it less badly. I think this is an important note. This has happened twice before in my career. In 1975, both gold and the U.S. dollar did well. Similarly, in 2002, and in both cases, they were safe haven trades. Further, in both cases, towards the end of the combined move, the dollar rolled over and gold did very well. And that's the supposition that I have now. I think that you will see the U.S. dollar do well relative to other currencies, but I think you will also see gold do well, both in dollar terms and denominated in other currencies. My own experience in 40 years has been dollar-centric because I've lived in the United States. And from my own point of view, the most important determinant of the gold price in U.S. dollars has been the relative faith in the U.S. 10-year Treasury and gold. The U.S. 10-year Treasury has, of course, been in a 35-year bull market beginning in 1982. And although it isn't impossible that the U.S. 10-year Treasury could continue to do well, the truth is, after 35 years, my belief that bull market is much closer to the end than to the beginning, simply because of very low interest rates. If that's true, and you agree with my thesis that gold trades contra to the U.S. 10-year Treasury, one would have to accept that the gold market then is closer to the beginning of its market than the end, if the bonds are closer to the end of their market than the beginning. And that's the situation that I see increasingly.
Now, going with what you said, Alan Greenspan was out there, and he is saying that people should own gold as insurance. And he agrees with Ron Paul, which, is crazy in itself. But, do you also see that people should be holding gold and silver as an insurance policy? And why do you think he's saying this at this time?
Well, remember that in the dim distance past, Alan Greenspan was one of ours. And my suspicion is that the thoughts that you and I describe publicly, Mr. Greenspan feels privately. I met him and spent some time with him a year ago and found him to be a thoroughly charming human being. And my suspicion is that he understands, as the partial author of our own dilemma, the Fed balance sheet writ large, that he understands how it unwinds. There is nobody like somebody who has caused a problem to understand the nature of the problem. And I would suspect maybe that I'm being too harsh. From Mr. Greenspan's point of view, during his period in time in Washington, our fiscal outlook was so completely out of control that had he not expanded the Fed's balance sheet, he believes that private borrowers would have been frozen out of the credit markets in totality. But irrespective of his culpability for where we are, I think his description of the dilemma that we face is completely honest. Greenspan is good at arithmetic, as is Dr. Paul. And I suspect your readers are too. So let me trouble you with some arithmetic. At the federal level, we have about $20 trillion in on-balance sheet liabilities before state and local debt. On the off-balance sheet liabilities, the Congressional Budget Office, not Rick Rule or Alan Greenspan, suggests that the cumulative net present value of our off-balance sheet liabilities is $120 trillion. It's interesting when I'm on the road and I use these statistics that nobody blanches, for the simple reason the trillions are almost too big to quantify. But suffice it to say, we owe each other $140 trillion. Mr. Greenspan understands that there's two ways out of this dilemma. One is an honest default, where we say to the Social Security recipients, to Medicaid recipients, to Medicare recipients, yes, we promised you, but no, we're not going to deliver. The other is a dishonest default, where we inflate away the net present value of our obligations. And my suspicion is that the dishonest way is the American way with regards to default. So my suspicion is that the net present value of the obligations will over time be inflated away to the benefit of gold. It reminds me of when I came into financial services in the 1970s. We had the choice between guns or butter, and the electorate said yes to that choice, both guns and butter. And the consequence was that we devalued the U.S. dollar enough through the decade of the 1970s that the 30-year interest rate went from 4.5 to almost 13. My suspicion with regards to this is past as prologue.
So what you're saying, and make sure if I get this correct, we're going to see inflation here in the U.S. When you say inflation, you're talking about 3%, 4%, or much higher?
That's a really good question, too, because we measure inflation in a way that the number is given to us by Washington, which I personally believe is a fraudulent number. And I personally believe it's a deliberately fraudulent number. Listen, the people who compile the CPI don't shop where you shop or I shop or where your listeners shop. They shop at a place where they don't add food or fuel if it's inconvenient, although we drive and we eat. Interestingly, too, they don't include tax in their calculation of the CPI. Were I not to have to pay tax, I wouldn't bitch so much about the index, but the truth is that I do. My suspicion is that the devaluation of the dollar, which is the flip side of inflation, is clipping along now at 4 or 5% per annum. But the way that they measure it, it shows up at 1.6 or a 1.8. I would ask your listeners to consider, with regards to the purchasing power of their paychecks, whether or not they are effectively maintaining their purchasing power year on year. And my suspicion is that well over 90% of your listeners would suggest that the deterioration of their purchasing power, which is all that matters to them, is increasing at 4 or 5% per year. If I can prolong this a little bit, I'd like to give you an illustration. This morning on my way to work, I drove past an establishment familiar to many of your listeners called Motel 6. When I was a young man, I had occasion to stay at Motel 6. It was named Motel 6 because the price of a room there was $6 per night. This morning when I drove by, the sign said Motel 6, $59.95. In other words, $60. Over 30 years, there's only one of two explanations for this. Either a room at Motel 6 is 10 times the size and 10 times as nice as when I had to stay there, or else the denominator, the unit of value on the purchasing mechanism for a night at Motel 6 has declined by 90%. Now, with specific regards to gold, when a room at Motel 6 was cheap at $6 a night, an ounce of gold bought you 5 or 6 room nights. Now that a room at Motel 6 is expensive at $60, an ounce of gold buys you 13 room nights. The fact that gold hasn't merely kept its purchasing power, but rather has increased its purchasing power over 35 years through thick and thin and through many interest rate cycles speaks precisely to your prior question about whether your listeners should consider owning gold, only if they want to preserve their purchasing power.
From everything that we've been talking about, Trump is out there. And he is saying that he's going to spend money, well, we should really say borrow money, to create jobs, bring back manufacturing, make the economy a lot better. Now, during a press conference, he blurted out that the economy is a mess. And, when we hear him saying, he's going to bring back all these jobs, he's going to spend all this money, we're going to have a border tax, we're going to do all these things, is this actually going to help the economy at all?
I'm at a loss. Mr. Trump says so many things that occasionally he says something that's true. I think not by design, perhaps. It's difficult for me to understand how you solve a problem of too much debt by adding on more debt. My instinct is, if you are buried deeply in debt, that the answer is to stop digging. Mr. Trump looks like he will be faced, and I say Mr. Trump, our president, looks like he'll be faced with a deficit this year of $1 trillion, which he proposes to double. Some small portion of that is mine, and frankly, I resent it. Do I think he'll be demonstrably worse president than our last president? I'm not sure about that, but I don't think he'll be demonstrably better. I need to say, and this is going to make me sound like a horrible cynic, which I hope I'm not. My hope for Trump is that he is so deeply despised by the Democrats and the establishment Republicans and the deep state and the conventional media that for 4 years he strives mightily and accomplishes absolutely nothing. The concept that we would have a president in office who wasn't able to do substantial harm for 4 years seems to me to be a blessing in disguise. When most people want the president to do something, in my own experience, almost everything that they have ever gotten done has been harmful. So the best possible outcome from my viewpoint would be 4 years of stasis. That is that he published a bunch of tweets. He got a bunch of people angry. He got the Toronto Globe and Mail and the New York Times into states of apoplexy. He consumed Congress's time hating him to the extent that they had no time left over to deprive me of my earned wealth. That would be the best possible outcome. Now, it could be, when we look at his demonstrated skill sets, that his background in bankruptcy could be useful. One thing that he has accomplished, as I understand it, is presided over 4 bankruptcies. And I make joking reference to the state of the nation's finances, because certainly if our Commonwealth was incorporated as a corporation and we didn't have the ability to steal our citizens' wealth through taxation, we would certainly be bankrupt. And that skill of his might be useful.
You know, it's very interesting. Janet Yellen, she was also giving a news conference to Capitol Hill. She was speaking to Capitol Hill, and she made a reference that the economy is weakening now. She's disappointed in the economy. And she also said, you know, if the economy starts to weaken further, don't blame the Fed, which I find very interesting. Why all of a sudden is she saying that she's disappointed in the economy? Because all throughout this period of time, her and Obama, they were telling us how well the economy was doing. And now all of a sudden, she's saying that the economy is disappointing, it's weakening, and don't blame the Fed. Why all of a sudden the 180-degree turn here?
Well, first of all, I'm ill-equipped to answer your question. I'm neither a politician nor an economist. If I had to venture a guess, I would say that it's partially psychological and partially due to her background. In the first instance, it's worthy to note that Mrs. Yellen has never had a job. She has never had to produce a product other than studies and papers and stuff like that. She's never had to meet a payroll. She's never had to subtract the cost of producing a product from its selling price to report to her bank or her shareholders, because she's never had any. And so perhaps the economy that she's talking about is the economy around the Beltway. The second thing is, I think, perfectly normal and natural. Mrs. Yellen is a creature of the deep state, and she reflects the ethos that has surrounded the Obamas, the Clintons, the Bushes, and their ilk in the past. And the recent election that we had in the United States, however misguided we might see Trump as being, amounted to a popular repudiation of the deep state and Mrs. Yellen. And it makes perfect sense that that deep, humiliating repudiation would make her depressed and look at any data that she saw as a negative data point. My own particular belief is that the economy isn't probably markedly stronger or weaker than it was when Ms. Yellen felt more secure in her outlook with regards to the political constituency. But my suspicion is that she's suffering from a typical old case of depression from having been thoroughly repudiated by half of the electorate.
She also came out saying that they were going to raise the interest rates at least 3 times this year, and so far they've missed the first mark. Do you think this is actually going to happen where they can raise the rates?
I don't know the answer to that, but I hope they do. I think the interest rate is artificially low, and I think a policy of punishing savers to incent spenders from a social policy point of view is thoroughly misguided. The fact that people who worked through their adult life and saved and hoped that the accumulated surplus, which is what people's earnings are, would sustain them in their old age comfortably, was discredited. The artificially low interest rate simply subsidizes spenders at the expense of savers, which is not the way to make America great. So to the extent that she was able to raise interest rates, I think that would be a wonderful thing. But I don't know if the political constituencies as they exist today would permit it.
If they do raise interest rates, I mean, yes, it would help the savers and those people saving for retirement who are in retirement. But what happens to the housing industry when rates move up? We saw when the rates moved up just a little bit, mortgage applications decline rapidly, sales decline rapidly. And if rates move up and they raise the rates, this could start a chain reaction where the housing market might be affected, and that leads into, lumber, leads into many other aspects. What do you say to that?
Reckonings are otherwise known as bear markets. Reckonings are cleansing events. And the longer that you forestall a reckoning, the longer that you forestall a repricing based to the carrying capacity of the economy, the uglier the resolution actually becomes. The truth is that bear markets don't cause wealth to go away. They redistribute it. The cynic would say that they redistribute it to those who deserve it. You know that if the markets fell by 20% overnight, the price of, the value of Procter and Gamble and Johnson & Johnson and companies like that, the value of those companies don't decline by 20%. The price declines by 20%. Similarly, if the housing price declines overnight by 25%, the utility of the house to the consumer doesn't change, but the ownership of the house may change. From the unwise to the wise. And while it's messy, it's not necessarily a bad thing.
So you mentioned bear market, and there are individuals out there like Charles Nenner, Harry Dent, and many others who are using all different methods to look at the economy and look at the stock market. And they're saying, maybe in the third quarter of this year or sometime, we're going to have some type of correction. I mean, right now, when you look at the stock market, what is it really based on? Is it based on earnings? Is it based on profits? Is it based on sales? Because as we can see with many of the companies that are reporting in, we're not seeing that. I mean, Caterpillar, what do they have, like 25 months of negative sales declining sales? What do you see? Do you see the market declining anytime soon, or some type of correction coming?
With the caveat that I'm really a credit analyst and not an economist.
Yes.
I see mixed signals in the economy. We're beginning to see my own sector, natural resources and precious metals, recover from what can only be described as a depression. That capital goods spending cycle has really impacted too companies like Caterpillar. In other parts of the economy, consumer goods as an example, you're seeing relative strength. When I look at the S&P 500 in our country, and I'm not qualified to understand deeply a lot of industries because I focused on natural resources, I see very high quality companies, but I see companies that aren't making large capital investments for the future, which I can only equate to them seeing weaker demand in the future than they're seeing currently. Because certainly the balance sheets and the income statements from the big part of corporate America are the best that they have ever been in my career. Profit margins are higher than they have been for 40 years. The 2008 financial crises scared the large corporations much more than they scared governments. So at the same way that they were hiding debts in the middle part of the last decade, they're hiding cash today so that they don't have to buy back stock or give it to shareholders. Those balance sheets and those income statements from historical standards are extremely strong. What scares me is a weakness in demand, not just in our economy, but in global economies, and artificially low interest rates. 2015 was probably the strangest year in markets in my career. People bought bonds for capital gains because they thought the interest rate was going lower, and they bought stock for income. Can you imagine that? A situation where you bought the asset class that was supposed to shield you, and you bought that for capital gains, and you bought stocks for income. We are in a part of the world that, from my own point of view, is completely uncharted territory. So I'm delighted that people like Harry Dent, who I have a lot of respect for, have the courage to do market forecasting, because I certainly don't. I can do it on a company-by-company basis. But the truth is that my crystal ball is cracked and cloudy.
We see a lot of economic data out there pointing to a type of recession that we're in right now. When we look around, we see retail is contracting. We see the housing bubble is continually being blown up. The prices are moving up, but we see certain areas where they're starting to come down now and traffic's drying up. We also see, coming out of Goldman Sachs, U.S. refiners are now facing the prospect of weakening gasoline demand for the first time in 5 years. From your viewpoint, why do you think gasoline demand is coming down? I mean, the prices of fuel right now is very low. Does this say that the U.S. consumer is ill, that they don't have the funds to go out and purchase the fuel? What's your take on that?
Well, certainly while this economy has some strong points, the overall U.S. economy, to me, doesn't feel strong. And although, again, I'm not an economist, I'm a credit analyst, I lay this to really three interrelated topics. The first is that there has been a consistent decline in the purchasing power of average Americans' wages for 25 years. And I think this has to do more with the individual than the system. Americans haven't upgraded their skills for 25 years. And in globalization, the fact that we have less to offer than our peers in other parts of the world means that our wages have stagnated, because the contribution made by American labor to the finished products has been inefficient compared to the contributions made by Indian and Chinese labor. The second thing is related to that. We have chosen to have our cake and eat it too, in the sense that we have built up debt on the individual level and on the collective level to a point where we haven't seen these levels of debt before in our society. The last time that we had a reckoning in this country was really in 1980. And at that point in time, debt at the federal level was less than 25% of GDP. If we have a reckoning this time, and we have to have a reckoning eventually, remember that on-balance sheet liabilities at the federal level are now about 1 times GDP. In other words, we have about a quarter of the capacity to deal with it that we once had. And the third is that bear markets, however they take place, however ugly they are cleansing. They're a reset. And if you want to begin to have an efficient economy, you need to reprice all of the inputs with regards to the economy. The truth is that our whole country, not everybody in the country, but our whole country has been cannibalizing, if you will, the capital contributions that were made early on. We have not been carrying our consumption as a people for almost 30 years. Our lifestyle has not reflected the contributions that we've made to the global economy. And unfortunately, that will have to take place, and it will be unpleasant for many of us.
So when you say a reset or a reckoning, what exactly do you mean? Like a complete collapse of the system like we had, like not collapse, but the system deteriorating like we had in 2008?
I don't know if we'll have a catastrophic event like we had in 2008, although certainly I don't believe that we dealt with the root cause of that liquidity crisis. And my suspicion is if you don't deal with the root cause, you have a high risk of repeating it. But my own suspicion is that we need to relive the 70s in some way, shape, or form. That we face a reckoning as a society that will take a long time to reconcile. I don't know your own experience in the 70s, but my experience as a young man, very young man at the beginning of it, was sort of confusion as we reconciled the booms of the 50s and 60s. We reconciled the collective decision with regards to guns and butter. And that reconciliation was ugly. An equities market between 1968 and 1982 that lost half its value. A long, grinding bear market in equities. A bear market that was so deep and thoroughgoing that Business Week magazine published a cover called The End of Equities once. A situation where people's expectation of the purchasing power of their dollars was such that by the end of it, they demanded 15.5% as compensation for a U.S. 10-year bond. An economic circumstance that is severe but probably survivable. My hope is that as a society, we are spared the civil discord that we saw in the 1970s, which, as you know, turned violent on college campuses, turned violent in minority neighborhoods. We didn't have in this country the class-based warfare that we had in other countries, but it wouldn't surprise me to have more overt hostility between the haves and the have-nots, with the class of have-nots having expanded substantially over the last 35 years.
Now, you talk about civil unrest and, rioting and things like that. And we see today there's a huge amount of movement with certain groups trying to remove Trump as president. Corporate media is out there. They're talking about the 25th Amendment, Article 4. He's losing it, so we can remove him. They're making all different type of cases on how we can get rid of Trump. And they're continually having protests. And a lot of them become very violent out in certain areas. What is your take on what is going on in the country in regards to Trump and all what we're seeing right now?
I think those groups should all send Trump a check. He has done a better job mobilizing them than they have been able to do themselves for years and years and years. The truth on the face of it, from somebody who actually has an orientation towards freedom, that is, for a libertarian, the truth is that Trump resembles Obama fairly substantially. The forces of the so-called progressive forces couldn't demonstrate aggressively during the Obama regime because he was their figurehead. The person that we have in place is prescribing what is, from my point of view, exactly the same policies. He's doing it with very different language, but he makes a wonderful icon for their hate. From my point of view, Trump is the best mobilizer that the progressives have ever had. And they ought to be, congratulating him as opposed to reviling him, because of the very fact that he is an icon for their discontent. The practical import of his policies relative to Obama's policies, from my point of view, as being part of what I would call a freedom constituency, is that there's absolutely no difference in the policies. There's an enormous difference in the rhetoric.
For my last question, Rick, do you see any black swans or anything out there that might shake up the economy, the market?
I do. I think that by the way, I'm a bull. I'm an optimist. I should answer that question in a way that none of the people that you interview probably ever do. I'm incredibly optimistic in the sense that the longest unbroken bull market in history is the ascent of man. It's just occasionally we collapse into collective stupidity when individually we're pretty good people. The United States is still a country where 4 or 5 pimply-faced kids can commandeer a garage and Google comes out of it or Facebook comes out of it, or just these incredibly wonderful advances for mankind. When we act individually, there's been no people on earth that have been as productive as we are. Unfortunately, we allow ourselves to vote. And as a collective, we're as stupid as we are great individually. So, having given you that prologue, the situation that really makes me nervous is our belief in collective answers to individual problems. The fact that we believe that we have a right to have somebody else solve our problems. Particularly our fiscal problems. When I was a young man, I once heard a ditty, which I think they should make Congress recite every day. It goes like this: when your outgo exceeds your income, your upkeep becomes your downfall. Now, that's very simple. And if Congress were required to repeat that every day, the ascent of man would be reflected in the United States the way it was for 100 years, and we wouldn't be having discussions like this. Sadly, that isn't the case. So my most important near-term concern is that we have allowed our politicians to turn us on each other, saying that other people are responsible for the demise in our purchasing power, that other people are getting the benefits that we are entitled to. I'm concerned about the fact that we haven't had a reckoning. I'm concerned about the fact that we haven't had a reset. I'm concerned about the fact that all of the conditions precedent to the 2008 crisis in confidence, the liquidity crisis, have, from my own point of view, gone unaddressed. I'm concerned about bank balance sheets. I'm concerned about the central bank balance sheet. I'm concerned about the fact that the market seems to run on confidence. And if the confidence is withdrawn, the same set of liquidity crises that we experienced in 2008, we could experience again, except for that our ability to deal with them, our ability to get people to accept the product of the printing press, our ability to extend and expand the Fed's balance sheet, which has expanded fourfold relative to GDP, would be limited. So while I sort of understand how we got out of it last time, I'm less understanding how we will get out of it this time without the spanking that we deserve.
Rick, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
I would be delighted if people came to our website, which is www.sprottglobal.com. People having questions, particularly about natural resource investments, are invited to contact us at contact.www.sprottglobal.com or call us, me in particular,